All right, welcome back to the deep dive. So glad you could join us. As always, we're diving deep into a new topic. Today it's Supra. We always aim to cut through all the noise, give you the most important info, and we're tackling their vision for a self-operating financial system called AutoFi. Pretty dense stuff.
Yeah, for sure. We'll break it down. So Supra is aiming for something pretty radical, right? They call it AutoFi. They want to move away from the whole user-initiated thing that's so common in DeFi right now.
You mean like how most DeFi apps today, they rely on users to trigger actions? Like you have to be the one to say, okay, I want to swap this token, I want to provide liquidity, all that stuff.
Exactly. It's all about user action. But with Supra, they want the protocol itself to be the one calling the shots, initiating and executing all these financial activities.
So instead of me deciding to lend my crypto, the system itself would find the optimal place to lend it based on my predefined parameters, of course.
Right. And that's where Supra's vertically integrated stack comes in.
Okay, let's talk about that. The document mentions it a lot. What exactly is this stack, and why is it so crucial to making this whole self-operating thing actually work?
Well, think about it like this. Most blockchains, they're just the base layer, right? Then you have all these separate dApps built on top, all independent. Supra is doing things differently. They've built all the key pieces, the blockchain itself, the oracles, the automation logic, directly into the system from the ground up.
So it's less like a bunch of separate apps cobbled together, and more like one streamlined machine, I guess, where every part is designed to work in perfect harmony.
That's a great way to put it. It's all about seamless coordination from the start.
So what are the key parts of this stack, the ones that really make this hands-off approach possible?
All right, well, first off, they're multi-VM layer 1, super high speed.
Multi-VM, that's like having multiple virtual machines running simultaneously on the blockchain, right?
Yeah, exactly. And the advantage there is that it allows for crazy fast processing. We're talking sub-second finality and extremely high throughput, both essential for a system that needs to react in real time, which is kind of the whole point here, right?
Okay, so transactions are confirmed almost instantly, and the system can handle a huge volume of them. Makes sense. What else?
So then you have their native Oracle feeds, fast, reliable.
Oracles are basically like data pipelines, right? They bring real-world info onto the blockchain so the system can react to changes like prices and stuff.
Yeah, exactly. And Supra's built their own oracles directly into the system, so they're super fast and secure. And that constant flow of accurate information is what makes everything else possible. You can't have automation without reliable data.
Couldn't agree more. Accurate data is key. So what's next in this arsenal of automation?
What they call zero-block delay protocol-level automation. That's where things get really interesting. Basically, it means smart contracts on Supra can react to data changes from those oracles in the same block instantly.
No delay. So if the price of Bitcoin on the Oracle feed spikes suddenly, a smart contract on Supra can react and maybe execute a trade before that price changes again.
Right, within that same block, no waiting around. That's unlike most blockchains, where there's usually a delay of at least one block before a contract can respond.
So we're talking about a system that's operating at the speed of, well, the blockchain itself. That's impressive. Then we have cross-chain messaging, right?
Yeah, and that's super important because different blockchains have different strengths, right? So Supra's built-in mechanisms for secure and speedy communication between chains.
Essential for any system that's supposed to operate across the entire crypto landscape. Can't be stuck on just one chain, gotta talk to them all.
Right. Interoperability is crucial. And then there's one more piece, which is kind of cool. They use VRF, verifiable random function, to make sure everything's fair.
Randomness. What's that got to do with finance?
Well, think about things like on-chain gaming, or maybe even some types of governance where you need truly random, unbiased outcomes. That's where VRF comes in.
So it's like adding an element of chance, but in a way that everyone can verify is fair and can't be manipulated.
Precisely. Makes the whole system more robust and trustworthy.
Okay, so we've got the super high-tech foundation. Now, the document places a lot of emphasis on the Treasury. It seems to be at the heart of this whole self-operating system, but it's not just a passive vault, is it?
No, not at all. It's more like an algorithmic market participant. Meaning it's not just sitting there holding assets. It's actively engaging with the market, using those AutoFi primitives we're about to talk about, making decisions and generating value.
Okay, so active Treasury makes sense. Now let's get into those primitives, the tools that really make this whole thing tick. First up, auto arbitrage. That sounds pretty self-explanatory, right?
It is, but with a twist. So yeah, it's designed to spot and exploit price differences across different markets. But it's not reliant on external bots or arbitragers. It's built directly into the protocol.
So it's constantly scanning for price differences across various dexes and executing trades automatically to profit from those differences.
Exactly. And because it's native to the protocol, it can act super fast. Remember that zero block delay. So it can capture those arbitrage opportunities more efficiently than any external bot could.
And those profits go straight to the Treasury.
Well, not all of them. There's a revenue sharing model. 50% to the Treasury, 25% to the DApp that originated the arbitrage opportunity, and 25% to the node operators.
So everyone benefits. The Treasury gets stronger. Developers are incentivized to build on Supra. And the folks keeping the network running get rewarded. Seems pretty well thought out. But how does this benefit the average user?
Well, by constantly arbitraging, the system helps to make prices across the whole ecosystem more stable, reduces slippage for traders. It's all about promoting efficiency. And that ultimately benefits everyone.
Okay, that makes sense. Next, we have AutoLiquidations, which sounds a bit scarier, right?
Maybe, but it's actually all about risk management. Basically, AutoLiquidations ensures that all the financial positions across lending platforms, leverage trading, all that, remain solvent.
Yeah.
And it does it automatically without needing those external liquidation bots you see on other chains.
So say someone borrows crypto using their other crypto as collateral, and then the price of that collateral drops too low. The system would automatically liquidate their position to protect the lender.
Exactly. The protocol has built-in logic that uses those Oracle feeds to constantly monitor these positions. If the collateralization ratio drops below a certain threshold, boom, liquidation happens instantly.
And I'm guessing these liquidations also generate revenue.
Yep. They call it defensive yield. It's how the system earns even during market downturns or when people make risky bets.
Interesting. So it's like turning a potential negative event into a positive outcome.
Precisely. And again, that revenue gets split. 50% to the Treasury, 25% to the originating DApp, 25% to node operators.
Another win-win. But it's more than just about making money, right? This whole system is designed to be really trustworthy.
Exactly. Auto-liquidations help to make the system more resilient and transparent. Users can be more confident that the protocol itself is managing risk effectively.
Okay, next up is auto-liquidity. We talk about the Treasury acting as a market maker. Is this how it does that?
It is. So with auto-liquidity, the Treasury deploys capital to DXs, to provide liquidity for trading pairs. But it's not just randomly dumping tokens into pools. It uses these smart contracts that automatically adjust the amount of capital based on market conditions.
So the system is constantly monitoring things like trading volume, volatility, all that stuff, and then moving capital around accordingly.
Yeah, so it might reduce its stake in a pool if trading activity is low, or pull capital out if there's a risk of impermanent loss, or double down on a pool that's generating a lot of fees.
Wow, that's a lot more sophisticated than just, passively providing liquidity.
Yeah.
And all driven by algorithms.
And that's the beauty of it. By intelligently managing liquidity, Supra aims to create deep, sustainable markets that benefit everyone, reduces slippage, makes trading more efficient.
Really interesting. So on to AutoLend. This is where things get a little more complex, right?
A bit. It's basically a programmable credit layer. It automates the whole lending process, and it can go beyond just the usual over-collateralized loans we see in DeFi.
Meaning?
Well, it can also incorporate things like KPIs, key performance indicators, to assess a borrower's creditworthiness, or even reputation scores.
So say a DAO wants to take out a loan, but they don't have enough crypto to put up as collateral. The system might look at their on-chain activity, see that they're a well-established and active DAO, and approve the loan based on that.
Exactly. It's all about using on-chain data to make a more informed lending decisions, moving beyond just over-collateralization.
And this whole process is automated. The interest rates, the repayment terms, all that.
Yeah. It uses oracles to constantly monitor everything. So interest rates might adjust based on market volatility, or maybe the borrower's risk profile changes. All that stuff is taken into account automatically.
And the document mentions different tiers of lending logic, right?
Yeah. So you have your standard over-collateralized loans, then you have loans backed by KPIs, and then you have loans based purely on reputation, which is really interesting.
That's a whole new level of trust and transparency. And of course, these loans generate yield for the Treasury.
Of course. And the automated enforcement makes sure borrowers stick to the terms.
Okay, now let's get into the more advanced stuff. AutoFutures. This is bringing perpetual futures trading to Supra.
Yeah, and they're underwritten by the Treasury,
Mhm.
meaning the Treasury acts as the primary counterparty.
Yeah.
It provides the initial liquidity, kind of like a market maker, and it manages all the parameters.
Like the funding rate, the margin requirements.
Exactly. All that is adjusted dynamically based on real-time market data.
That's pretty wild. So you're trading against the protocol itself.
Essentially, yes. But the system is designed to be as fair and transparent as possible, and the automation helps to minimize risk.
And we're not done yet, right? We've still got auto options and auto hedge. Sounds like some pretty powerful tools.
Yeah, they're all about programmable derivatives and risk management, on-chain and automated.
Let's start with auto options. How do those work?
So basically, they allow users to create and execute options contracts, but it's all handled automatically.
So you can set your strike price, expiry date, all that, and the protocol will execute the option for you if the conditions are met.
Exactly. No need to manually monitor and exercise options. It's all automated based on your predefined parameters and those live Oracle feeds.
And what about auto hedge?
AutoHedge lets users create rules to automatically manage risk in their portfolios. So say you're worried about the price of Ether dropping below a certain level, you can set a rule to automatically convert some of your ETH to a stable coin if that happens.
So like an automated stop loss,
Yeah.
but more sophisticated.
Right. And it can go beyond just simple price triggers. You could have rules based on volatility, different metrics, really anything you can think of.
That's pretty awesome.
Yeah.
Makes risk management a lot easier. And there is the possibility of even the Treasury itself issuing options.
Yeah, it's a pretty wild idea.
Yeah.
Essentially, the Treasury could become a major player in the options market, dynamically managing its own risk and providing liquidity to users.
All right, now we get to the grand orchestrator. AutoVaults. I'm guessing this is where it all comes together.
Yeah, think of AutoVaults like automated portfolio managers. They take your capital and allocate it across all the different AutoFi modules based on your chosen strategy.
So I could deposit my crypto into an AutoVault and tell it, hey, I want you to focus on yield generation.
Yep.
Or I want to prioritize safety, and the vault would automatically manage my assets accordingly.
That's the idea. And they use those modular primitives we talked about so they can rebalance, hedge, all that stuff, all based on live market data.
So it's like a robo-advisor, but for DeFi.
Uh-huh.
And super advanced.
Exactly. It's all about automating complex financial strategies and making them accessible to everyone.
Very cool. And finally, we have auto risk. I'm assuming this is what keeps a whole ship from sinking.
That's a good way to put it. Auto risk is the brains of the operation. It's constantly monitoring everything, all the AutoFi modules, and making sure everything's running smoothly.
By monitoring, you mean looking for potential risks
Yeah.
and making adjustments before they blow up.
Exactly. So if it detects that a certain lending pool is getting too risky, it might automatically adjust the collateralization requirements. Or if there's a sudden spike in volatility, it might tweak the parameters of the auto futures market.
So it's like a global risk manager that's constantly fine-tuning the system.
Yeah, it's all about maintaining stability and preventing cascading failures, like what we've seen in other DeFi protocols that weren't so well designed.
That makes a lot of sense. Now, with AutoFi, interoperability is also super important. How do all these different primitives actually work together?
Well, that's the beauty of the design. They're not isolated silos. They're all meant to interact and complement each other. They call this design reflexive capital loops.
Give me an example of that. How could one primitive benefit another?
So, for example, auto hedge could be used to protect the positions in AutoLend. If a loan is at risk of liquidation because the collateral value is dropping, auto hedge could automatically step in and hedge that position.
And AutoLiquidity ensures that there's always enough liquidity for auto futures to function properly.
Exactly. And AutoVaults can use auto options to further enhance their strategies and manage risk. It's all interconnected.
The document also talks about something called the Supra Flywheel. What's that all about?
The Supra Flywheel is the idea that activity within the system generates revenue, and that revenue is then used to make the system even stronger, which attracts more activity, which generates more revenue, and so on. It's a self-reinforcing cycle.
So it starts with those initial profits from auto arbitrage and auto liquidations.
Right. That gives the Treasury a solid foundation. Then that capital is deployed strategically into other AutoFi modules, which generates more revenue. And that revenue can be used to buy back tokens, fund development, all sorts of things.
And the speed of Supra's underlying tech, that really amplifies this effect, right?
Definitely. The faster and more efficient the system is, the faster that flywheel spins. And the revenue sharing model helps too, because it incentivizes everyone to participate and build on the ecosystem.
This all sounds pretty transformative. What are the biggest implications for DeFi developers who are thinking about building on Supra?
Well, I think the biggest thing is that they get to inherit a lot of the heavy lifting. They don't have to build all this complex financial infrastructure from scratch.
They get access to all those pre-built primitives, the liquidity from the Treasury, the risk management
Yeah,
systems.
right. It drastically reduces their development costs and time to market, and they also get a share of the revenue generated by their dApps.
Pretty compelling value proposition. And what about the average user? How does all this benefit them?
Well, for one, they get access to more sophisticated financial products. They can participate in these automated lending and borrowing markets. They can trade perpetual futures. They can even create their own customized automated strategies.
And it's all backed by this incredibly robust risk-managed system.
Exactly. And because it's all on chain, it's much more transparent than traditional finance. Users can always see exactly what's happening with their money.
The document also mentions this idea of AI-augmented AutoFi, which sounds pretty futuristic.
Yeah, they're basically exploring how AI could be used to further enhance the intelligence of the AutoFi system.
So you could have AI agents analyzing market data, coming up with new trading strategies, even managing risk.
Potentially, yeah. They even talk about having different AI committees with specialized roles, like an opportunistic committee focused on finding profitable opportunities and a risk-averse committee that's all about safety.
That's wild. It's like taking the whole concept of a DAO to a whole new level.
Right, and then there's AutoStable Plus, which is their idea for a next-generation stablecoin.
Another ambitious idea. So it's a stable coin, pegged something like the US dollar, but it also aims to appreciate in value over time.
Yeah, they call it inflation aware. So it not only maintains its peg, it also tries to grow its purchasing power over time.
And it's powered by all those AutoFi mechanisms, so it can potentially generate yield, participate in arbitrage, all that stuff.
Exactly. It's still in the conceptual stage, but it's a really interesting idea.
So to wrap things up, it seems like Supra is really trying to build something much bigger than just another set of DeFi protocols. It's almost like a whole new financial operating system.
Yeah, it's definitely a grand vision, and whether they can pull it off remains to be seen, but it's certainly an exciting project to watch.
I totally agree. It really makes you think about the future of finance. What if we could automate so much of what we do today? What if we could create these self-governing systems that are truly transparent, efficient, and resilient? It's definitely something worth pondering. Anyway, that's all the time we have for today. Thanks for joining us on the deep dive. We'll catch you next time.